Good day, Red Hot Storm Trader, and welcome to the second video. In the first video, we spoke about decompounding your portfolio and how to never blow your account during a drawdown, which means when you have consecutive losses due to the market environment. This video, I'm going to go through the watch list, what's lining up, and you need to take it with a pinch of salt with the fact that we are not in good times with trading, okay? We have to admit this. And we've entered the drawdown phase, which I do expect once or two times a year. But that is why we have the risk management, which I showed you with the 2% rule. And if you are feeling that you cannot really handle losses, the first thing is you need to go back into the idea of trading and how you have good months and bad months. And yes, we had a fantastic first quarter, and now we're not having a great quarter. All right, we've got to admit it. But what we've got to do is we've got to manage our risk, and we have to weather through this environment because trading continues with or without any of us, really. Okay, so what I'm going to do is I'm going to go through the watch list, and the idea that I've got is that if you saw the previous video, the decompounding is basically when you are using the 2% rule based on your current portfolio and not what your portfolio was. So you won't really lose a lot of money, even if you take 6, 7, 8, 9 losing trades in a row. But when we get to, and I'm telling you this for the future, if we ever get to 12 losing trades in a row, which is possible, it's happened before, and it should be easy to handle. You should be down, then maybe, let's go back to that Excel spreadsheet. If we're down to 12 losing trades in a row, then let's move this here. Then you would be down 21% of your portfolio. Okay, so from 10,000 Rand to 7,800. And if that happens, then what happens is I will send a video and say that this is where we're going to actually stop trading because we don't know when the market will rectify itself. The market can stay irrational longer than we can stay solvent. And this is a crucial point of time where you will need to stop trading, and I will keep sending trades until I see the equity curve turning up. And then when we see trends in the market and stuff, we'll get back in, and then hopefully we'll grab the wave of winners. You are in my trading world, okay? This is crucial for you to know, is that this is what I do on a daily basis. And if I'm not making an income with trading, then the trader service is not going to be doing that great. Okay, so we're in this together, and if you can get education, information on how trading works, then you know what, I'm very happy with you staying on board and learning how general markets work. And then before you know it, things will be going up. But that's only if we get to 12 losing trades in a row, which is a long time from now, okay? So I just show you now the worst case scenario. In the meantime, we're going to keep risking 2% of our portfolio, and I'm sure we can weather through this. I mean, with investing, sometimes you risk more than 15% of your portfolio per investment. Sometimes you risk more than 20% of your investment per trade. Okay, so let's go through this watch list and see what's going on. So the JSE continues to come down, and we're not seeing this in the stocks as much. So I'm guessing it's because of the reweightings of what is the highest part of the JSE. For example, the SAB Millers, the Anglos, the Billetins, the Richmonts, the British American Tobacco. All those have a higher weighting on the JSE, which can shift the movement of it compared to the other stocks. So we'll go through the JSE. All right, and we'll see that actually SAB Miller is now Bush and Bev, sorry. Okay, so you can see it has broken out of its uptrend, and we've got a confirmed downside, which means that it is in a bear market. It confirms with the recession, and now I'm only going to be looking for trades that are going short. Now, previously I've never been a big fan of shorting because the market drops very quickly and then it rises just as quick, and then it generally stops me out. So I'm not really a fan of shorting, but in a bear market, you have to use what you've got. And with the bear market, I normally risk 1 or 1.5% of my portfolio because I believe that the market will go up again. If you think about all the recessions that we've had and all the Great Depressions that we've had and all the terrorist attacks that we've had, eventually the markets go back to all-time highs. And that is my idea, is that the market goes up 70% of the time and drops 30% of the time. And now, unfortunately, we have to keep looking for those shorts in the market. Okay, so let's go through it. Aspen, nothing going on. We have African Rainbow, which is broken. Let's just see. I don't want to confirm it. It is still in a strong downtrend and it is showing downside to come. If it breaks below 73 or 73.8, we could get into a little short. So I'm writing that down. This is a trend trading system that I use, and it needs to go to around 73 Rand 40. Okay. Next we've got Barlow World, which looks like a mess. British, what is this? Bank of Africa, sideways movement. Billiton, sideways but following its downside. Richmond, it is forming a beautiful wedge pattern, I can see over here, which could actually signal that if it breaks to the upside, we could get into a long, but I'm going to have to confirm with the JSE, which has got a long way to go from here. But I'm going to write down, just in case, with CFR, that if it goes to 1110.80 due to the wedge and breaks out, that will be a long hedge that we could get into. CLS, it is entered into the sideways movement, doesn't look very good. Discovery, we are close to our stop loss level at 130, but hasn't hit just yet. I will send you a confirmation once it does, or if it decides to come back down from here, hopefully. But the thing is, the JSE is up for the day, so anything is possible. Famous Brands on its way down. This is Kumba. Kumba looks like it's finding some form of support, but we're going to have to see. It could form a new cup and handle, go to the upside, which you could grab, and then it goes carry on back down. But like I said, I'm not really keen to go long this market at the moment. Mr. Price also showing actually bullishness in the market with higher lows, and this was the ultimate tester. Do you see this little cross of a candle? It means that it tested the market. There was not much supply over here, and there was high demand, which pushed the price up, and that is the reason why it's moved up from here. Massmart on its way down. MTN, Nedbank also, we've got our stop loss at 217.15, I think. Okay, so we've still got some possibility for it turning down, but the JSE has to follow. It needs to come down as well. Netcare, nothing going on. Pick and Pay continues its downside. Raynet continues its downside. What I was waiting for was a nice head and shoulders, which is still very possible. And I'm writing that down because if it forms a head and shoulder, we can have a lot of downside to come at the moment. All right. You see what I mean by volatile times? Some are showing strong downside, some showing strong upside, and some just showing, like Standard Bank, just sideways movement, no trend confirmation. Sanlam, nothing. We can go a little quicker. Tiger Brands is broken out of a strong trend, okay, which was this uptrend over here, and it's continued to go down. And now it looks like we've got this support level at 363.97. If it breaks below, we can have a lot more downside for Tiger Brands. Nothing going on there. Telkom is showing strong downside at the moment. Truworths, nothing. Vodacom, it broke out of this beautiful cup and handle, and it looks like it's on its way up, so it is one of the hedges in the market that is going up while the rest of the market continues to drop. Okay, so we've got 3 potential trades lining up. We are in drawdown mode, so like I said, We don't need to be excited about it just yet. Maybe drop your risk to 1 to 1.5% now that we are shorting the market. Or if you are feeling a little bit anxious and you don't know what is really going on with the environment of the markets and you're not used to it, then you can, with pleasure, paper trade and see what goes on, what transpires before I say, guys, we are looking good. The market's back into its trending mode. But until then, we're just going to have to wait and see. Okay? Is there anything else that I've missed? No. All right. So that's the webinar for the month. The most important part of the webinar is the video 1. So if you haven't seen it, then go to video 1. Where I talk about decompounding so it can help you with your trading going forward, not just for this environment, but for every form of trading for the rest of your life. Have a fantastic rest of the month, and I will see you soon.